Hello everyone, I hope you all are doing well. Today we are going to discuss a very important topic, that is responsibility accounting. Now, what is responsibility accounting? Responsibility accounting is a system of management accounting under which the accountability is established according to the responsibility which is delegated to various levels of management and a management information and reporting system instituted to give the adequate feedback in terms of delegated responsibility. Under this system, the whole unit of an organization under a specific authority in a person are developed as the responsibility centers and evaluated individually for their performances. Responsibility accounting must be designed to suit the existing structure of the organization. It collects and reports the planned and actual accounting information about the inputs and outputs of the responsibility center. Responsibility accounting is defined by various authors on their various perspectives. From them, two are mentioned in this video. So, in general, we can say that responsibility accounting is a system of accounting that recognizes various responsibility centers throughout the organization and reflects the plans and the actions of each center by assigning particular revenues and cost to one having the permanent responsibility. It is also known as profitability accounting and activity accounting. So, we can say that in responsibility accounting, the organization is divided into various responsibility centers and each center is responsible for its own cost. The performance of each responsibility center is regularly measured and evaluated. Now, the next topic is that what are the various components, or you can say what are the various essential features of responsibility accounting. First is input and output, or you can say that it can be termed as cost and revenues, in which we get the information related to all the inputs and the outputs. The implementation and maintenance of responsibility accounting system is based upon the information which is related to inputs and outputs both. The physical resources utilized in an organization, like the quantity of raw material used, the labor hours which are worked in the organization, they are termed as input, and these inputs are expressed in monetary terms which are known as cost. Similarly, the outputs which are expressed in the monetary terms are known as revenues. Thus, responsibility accounting is based on cost and revenue information. Now, the next component is identification of the responsibility center. The whole concept of responsibility accounting is focused around the identification of responsibility centers. The responsibility centers represent the sphere of authority, or you can say the decision points in an organization. In a small firm, one individual or a small group of individuals who are usually the owners may possibly manage, or you can say control, the entire organization. But however, for effective control in a large firm, it is usually divided into meaningful segments, or you can say departments, or you can say their divisions. These subunits or divisions of organizations, they are known as responsibility accounting. A responsibility center is used under the control of an individual who is responsible for the control of all the activities of that subunit of an organization. This responsibility center may be a very small subunit of the organization, as an individual could be made responsible for one machine used in the manufacturing operations, or it may be very big division of an organization, such as a divisional manager could be responsible for achieving a certain level of profit from the divisions and investment under his control. However, the general guideline is that the unit of organization should be separable and identifiable for operating purposes and its performance measurable possible. Then the next essential feature is the planned and actual information, or you can say the target and actual information, or you can say it can be use of budgeting. Effective responsibility accounting requires both planned and actual financial information. It is not only the historical cost and revenue data, but also the planned future, which is essential for implementing of the responsibility accounting system. It is through budgets that the responsibility for implementing the plans is communicated to each level of management. The use of fixed budgets, flexible budgets, and profit planning are all incorporated into one overall system of responsibility accounting. Then the next important feature is the relationship between organization structure and responsibility center. A sound organization structures with clear cut lines of authority responsibility relationship are a prerequisite for establishing a successful responsibility accounting system. Responsibility accounting system must be so designed as to suit the organization structure. It must be founded upon the existing authority responsibility relationship in the organization. In fact, responsibility accounting system should be parallel the organization structure and should provide financial information to evaluate actual results of each individual responsible for a function. Now, the next important component is that is assigning cost to individual and limiting their efforts to controllable cost. In this, after identifying the responsibility centers and establishing the authority responsibility relationship, the responsibility accounting system involves assigning of cost and revenues to an individual. Only those costs and revenues over which an individual has a definite control can be assigned to him for evaluating his performance. The following guidelines should be followed while assigning the cost. If the person has authority over both the acquisition and use of the services, he should be charged with the cost of those services. Even if the person cannot significantly influence the amount of cost through his own direct actions, he may be charged with those elements with which the management decisions desires him to concern, so that he will help to influence those who are responsible. Now, the next topic, that is what are the requisites for effective responsibility accounting, or you can say the prerequisites of responsibility accounting. Number one, it should be a big company with divisionalized organization structure. The organization should have clear set of goals and targets. The managers should actively participate in establishing budgets against which their performances is to be measured. It means that the person whose performance is to be measured, he should be actively participating in standing the standards and measures for the performance. The managers are held responsible only for those activities over which they exercise significant degree of the control. The performance reporting should be timely and contain significant information relating to the responsibility centers. Now we have understood what is the meaning of responsibility accounting, what are its various features, and what are the various prerequisites for the effective responsibility accounting. Now the next topic is what are the steps of responsibility accounting. The organization is divided into various responsibility centers, and each responsibility center is put under the charge of a responsibility manager. The managers are responsible for the performance of their departments. The target of each responsibility centers are set in. The targets, or you can say the goals, are set in consultation with the manager of the responsibility centers, so that he may be able to give full information about his departments. The goal of the responsibility centers are properly communicated to them. It means that the targets should be fixed for each and every responsibility center. Now the third step is the actual performance of each responsibility center is recorded and communicated to the executives concerned, and the actual performance is compared with the targets set, and it helps in assessing the work of those center. Means we can say that we track the actual performance of each responsibility centers and compare the actual performances with the target performance. Then after comparison, the if in case there are any variances between the actual performance and the targeted performance, then they are analyzed. Timely actions is taken to take necessary corrective measures so that the work does not suffer in future. The directions of the top level management are communicated to the concerned responsibility centers so that the corrective measures are initiated at the earliest. The purpose of all these steps is to assign responsibility to different individuals so that the performance can be improved. In case the performance is not up to the mark, or you can say the performance is not as per the target set, then the responsibility may be fixed for it. The responsibility accounting will certainly act as a control device, and it will help in improving the overall performance of the business. Now, our next topic is what are the various types of responsibility centers. The main focus of responsibility accounting lies on the responsibility centers. A responsibility center is basically a subunit of an organization under the control of a manager who is held responsible for the activities that take place in that center. It is like a small business to achieve the objectives of a large organization. So, the number one center is known as cost center. A cost expense center is a segment of an organization in which the managers are held responsible for the cost incurred in that subunit but not for the revenues. Responsibility in a cost center is restricted to cost only. For planning purposes, the budget estimates are cost estimates. For control purposes, performance evaluation is guided by cost variances equal to difference between the actual and the budgeted cost of a given period. Cost center managers have control over some, or you can say all, the cost in their segments of the business but not over the revenues. In manufacturing organization, the production and service departments are classified as cost center. Also, a marketing department, a sales region, or a single sales representative can also be defined as a cost center. A cost center may vary from a small department with few employees to an entire manufacturing plant. In addition, cost centers may exist within the other cost center. For example, accounting department, repair and maintenance department. Now, the next responsibility center is revenue center. As the name suggests, it is a segment of the organization which is primarily responsible for generating sales revenue. A revenue center manager does not pose any control over the cost, investment in the assets, but usually has a control over some of the expense of the marketing department. The revenue center manager will control the selling price, promotion mix and product mix. The performance of a revenue center is evaluated by comparing the actual revenues with the budgeted revenues and actual marketing expenses with the budgeted marketing expense. For example, sales department is an example of the revenue center. Then our next center is profit center. It is also known as the business center. It is a segment of an organization whose manager is responsible for both revenues and the cost. In a profit center, the manager has a responsibility and authority to make the decisions that will affect both cost and revenues for the department, or you can say that division. The managers are encouraged to act as if they were running their own separate business. The main purpose of responsibility center is to maximize profit by making decisions relating to production volume, product mix, you can say selling price, or you can say the marketing strategies. The profit center managers aim at both the production and marketing of a product. Then the fourth center is investment center. It is responsible for both profits and investment. The investment center managers has control over revenues, expenses and the amounts invested in the center's assets. He also formulates the credit policies, which has a direct influence on debt collection, and inventory policies, which determine the investment in the inventory. The manager of an investment center has more authority and responsibility than the manager of either of cost center or a profit center. Besides controlling cost and revenues, he has investment responsibilities too. Investment on asset responsibility means the authority to buy, sell, and use divisional assets. For example, a new hotel being developed. Now, after understanding what are the various types of the responsibility centers, we can easily discuss what are the benefits, or you can say what are the advantages of responsibility accounting. It establishes a system of control. It improves and controls the company's operating activities for efficient outcome. Some responsibility center is given to each individual and he is held accountable for his own performance. No person can assign his responsibility to other. So in this system, responsibility is fixed individually. It facilitates stricter control on cost and revenue along with helping in planning and decision making. It encourages to budget for comparison of budgeted data and the actual achievements. It simplifies the performance reports because it excludes those items which are beyond the control of the individual. As in responsibility accounting, the responsibility center managers, they are only held responsible for the factors which are under their control. It also helps top management to make quick and effective decisions, and it gives a simplified report structure and guide to take quick and effective reporting. Relevant and up-to-date information is made available which can be used to estimate future cost and you can say the revenue. But there are certain disadvantages, or you can say problems related to the responsibility accounting. That is, in the absence of sound structure of organization, the responsibility centers, they can't be clearly identified. As we discussed earlier, the main center point of responsibility accounting, that is that the organization should have a clear structure of the organization and authority responsibility relationship should be clearly defined. So in case of absence of such structure, the responsibility accounting will not be effectively performed. Then the fresh analysis of conventional methods of classification of expenses may be unmanageable. If the responsibility and the objectives, they are not clearly defined and they are not properly delegated to the individuals, then the responsibility accounting system will not give you the proper result. Preparations of organization chart which clearly delineates lines of responsibility and authority is a very difficult task. Responsibility accounting reports may be overloaded with all the available information. So you can say, for responsibility accounting to be effective, a proper classification between controllable and non-controllable cost is a prime requisite. But practical difficulties arise while doing so, on account of due to the complex nature and variety of the cost. So this was your topic of responsibility accounting, in which we discussed what do you mean by responsibility accounting, what are its various components, or you can say what are its various essentials, and what are the various steps that we involve in implementing the responsibility accounting. Then along with that, we discussed what are the various types of responsibility centers, in which we discuss the four types of centers, that is your cost center, profit center, revenue center, and your investment center. And in the end, we discussed what are the benefits and what are the problems of responsibility accounting. So I hope students, you are clear about this topic. Thank you.